Welcome back. You're watching Editors Roundtable, and we're in conversation with Rajesh, and he believes that at least most of the pain for large caps could be in the price at these levels. Rajesh, so you're advocating selectively adding to portfolio,
Yes.
and one sector where you're adding on to is IT.
Yes.
And IT saw the biggest hit this week with an 8% cut with names like Tech Mahindra,
Correct.
down about 10%. So what are you adding, large cap or mid cap, and what is dragging them down?
So basically, I think this correction by and large is only today it has corrected. So all of a sudden in 1 week you see 10% down, but of that 10% probably 6-7% is today, right? Yeah. But if you look at 3 months period, then it is not that bad. The IT performance is not that bad. So we started buying from September, October onwards, correct? Now IT is linked to the US economy. You need to make sure that what is your view on US economy. If the US economy does well, Indian IT companies will do well. Very simple. If you look at the Indian IT companies commentary, look at the TCV wins of TCS, Infosys, Tech Mahindra, Persistent, Coforge, it has been very healthy. If you talk about the top US companies which are spending on IT, including BFSI companies, they already announced their plans for IT budgets, which is also again very, very healthy. So we think US economy to do well. Anyway, Donald Trump's talking about make America better again. So great again means Indian IT will do well. Add to that little bit effect of currency depreciation. I'm not of course assuming it, but because it is generally passed through. But in a way, it's a short-term kind of thing. Yes, again, it adds to your profitability, right? So IT means will do well. Within that, both large and mid, one needs to be selective. So we are holding, for example, Coforge in mid-cap from quite some time. And it is the best performing in terms of the earnings, in terms of the revenue growth, in terms of the mergers and acquisition, and in terms of ability to capture the new growth drivers. That's very important. Because there are many Indian IT companies that are still into the legacy business. They are probably not doing enough compared to what they should have been, compared to, if you look at their cash reserves are huge. Right, so why India doesn't have its own Alibaba, I still wonder. But yes, we don't have it Alibaba, so that's okay. And we don't get paid for the Alibaba valuation and Facebook valuation. So that's it. But I think Indian IT companies will do well, and their growth will be better than the Nifty earnings growth.
Okay, thank you very much. This has been such a great conversation, listening to the way you think about individual stocks and the market. But as we wrap on this edition of Editors Roundtable, we leave you with market commentary that we received from Pankaj Tibrewal.
The central bank for the last 18-24 months was on a cautious side to make sure that there isn't overheating. And now the central bank is acknowledging that there is a slowdown, and probably the actions which are following have been very, very good. They did the rate cut for the first time in the last 5 years. You saw the liquidity measures being taken by RBI on a continuous basis. And third, the risk weightage and the relaxations on the risk side, which they have been doing. At some point of time in the next few months, I think FI selling should bottom out. I think if earnings growth starts to come back, which could be in double digits, I think FIs will come back.